Welcome to This Explainer. Today, we're uncovering the true cost of your dream home. We're going to break down exactly why you absolutely must run your numbers through a West Virginia mortgage calculator before signing any real estate contracts. Buying a home is a massive step, right? But man, way too many buyers skip the crucial step of calculating their full financial picture. And let me tell you, it can cost them dearly.
Okay, let's dive right in. Put yourself in the shoes of a buyer for a second. You're looking at this absolutely perfect home. Maybe it's got this gorgeous wraparound porch or a stunning view of the mountains. It's beautiful. But before you fall head over heels in love, you have to ask yourself one critical question. Is your West Virginia dream home actually affordable? Because as you're about to see, the sticker price of a house is literally just the beginning of the story.
Take a look at this number, 0.62%. That surprising little figure is the preset estimated property tax rate in Charleston and Kanawha County. And honestly, it's a perfect example of a hidden cost that can completely ambush your monthly budget if you aren't prepared. I mean, if you're only looking at the price tag of the house and your interest rate, a local tax rate like this, it'll catch you entirely off guard when that very first mortgage bill actually arrives in the mail. Which brings us to Section 1, the hidden cost reality beyond the sticker price.
So, your principal, the actual money you borrowed to buy the house, is really only one piece of the pie. Right alongside it, you're paying interest to the lender, property taxes to the local government, and homeowners insurance to protect your investment. Oh, and by the way, if your down payment is less than 20%, you might even have a fifth piece shoved in there for private mortgage insurance or PMI.
The absolutely crucial point here is that buying a house completely blind to these extra local expenses, it can lead straight to immediate financial distress. Failing to factor in property taxes, insurance, and interest variability can quickly turn a dream home into a budget-busting nightmare. Assessing your total monthly housing costs before signing any contracts is quite literally the only way to protect yourself.
So, how do we prevent that? Let's move to Section 2, your financial planning tool, the West Virginia Mortgage Calculator. Trying to figure all of this out with just a notepad and pen is, frankly, a recipe for disaster. Manual math is incredibly slow and carries a super high risk of error. But on the flip side, using a digital calculator gives you instant, precise results. It takes all those complex algorithms that require advanced math and just wraps them up in a really user-friendly interface. That way, you can effortlessly test out different financial scenarios.
To get that highly accurate payment breakdown and a full amortization schedule, which, by the way, just shows how your loan balance decreases over time, you only need a few essential inputs. You simply plug in the home value, your down payment amount, the current interest rate, and your desired loan term, usually 10 to 30 years. Once you do that, the calculator just lifts the fog and shows you exactly what you can actually afford.
Let's look at how you can play around with those inputs in Section 3, customizing your mortgage math, testing scenarios.
By comparing a 15-year versus a 30-year fixed loan, you immediately see the massive trade-off at play. A 15-year loan is going to demand higher monthly payments, sure, but you build equity incredibly fast and pay significantly less total interest over the life of the loan. A 30-year loan, though, it gives your monthly budget some much-needed breathing room with lower payments, but you're going to pay substantially more in total interest over those 3 decades. The calculator lets you see these exact dollar amounts so you aren't just guessing.
You can also test fixed-rate versus adjustable-rate mortgages. Now, a fixed-rate loan is all about high safety and predictability. Your payments essentially remain the same over time. An adjustable-rate mortgage might really tempt you because it starts out cheaper, but it will vary later. If you run the numbers, you quickly realize an adjustable rate requires you to constantly watch market shifts. A fixed rate, on the other hand, just offers that long-term peace of mind.
The calculator instantly reveals the impact of your inputs. For example, bumping your down payment from 5% up to 20% dramatically decreases your monthly cost. Plus, it usually gets rid of the need for that pesky PMI we talked about earlier. Conversely, if you test interest rates and jump from a 5.5% to a 7.5% rate, you'll see your monthly payment increase pretty significantly. Seeing these shifts in real time is exactly why utilizing this tool is absolutely mandatory for smart budgeting.
All right, moving on to Section 4, Common Budgeting Traps. Don't go in blind.
Consider this your personal warning label. If you ignore property taxes, you're going to grossly underestimate your payment. If you have a fixed-rate bias, you'll be completely unprepared for shifts. And if you skip adding estimated insurance premiums or ignore HOA fees, you are walking straight into hidden monthly expenses and budget shortfalls.
The corrective action for every single one of these traps is actually really simple. Just plug the right local data into your digital calculator.
To prove exactly why you can't just use generic nationwide numbers, just look at how wildly local taxes vary right here in West Virginia. For instance, in Barber County, it might sit around 0.4%, but travel over to Kanawha County and you're looking at closer to 0.65%. It's a huge difference. If you don't input the specific rate for the local area you're actually buying in, well, your financial estimates are going to be practically useless.
And hey, let's talk about geography for a second. If you're buying near water in the state, say in the beautiful Kanawha Valley or along the Potomac River, you absolutely must remember to add a monthly estimate for flood insurance into the calculator. It's a super common requirement in those specific areas. Factoring it in early ensures you aren't blindsided when you're finally sitting down at the closing table.
That leads us nicely into Section 5, Confidence in Home Buying, Your Next Steps.
By following a few simple steps, you can turn all this complex data into a totally clear path forward. First, use pre-qualification estimators to gauge your borrowing power. Second, check your debt-to-income ratio with affordability calculators to ensure it stays in a healthy range. Third, you want to compare rates from national indices and your local banks. And fourth, if you already own a home, you can actually toggle the calculator to refi mode just to see if dropping interest rates could lower your current payments. Pretty handy, right?
I love this quote. Financial clarity is the foundation of a successful home purchase. When you understand your numbers, you take control of your future. Using a West Virginia-specific mortgage calculator really isn't just about doing a little bit of math. It's about financial clarity. When you truly understand your numbers, down to the exact local taxes and flood insurance, you are taking absolute control of your future financial security.
So before you sign a single contract, before you start putting in offers, and definitely before you fall madly in love with a property you haven't budgeted for, ask yourself this one final question. Are you ready to run your numbers? Seriously, equip yourself with a West Virginia mortgage calculator, test out your scenarios, and step into homeownership with your eyes wide open. Thanks so much for joining me for this explainer, and hey, happy house hunting!